Tesla stock price down another 3 percentage points. This stock is now down over 37% this year. We are in the fourth month of the year as I'm recording this. Stock is now in the 150s, down 37% year to date. The stock is now down 60% plus from the peak it reached about 3 years ago, back in 2021, a 61% down from that peak. Now at this point in time, this is during an actually fairly bullish market since that time. This is all while the company has released and is currently producing and ramping the most talked about vehicle in the history of the internet, which is the Tesla Cybertruck. This also comes amidst the company laying off a massive amount of employees. People are looking at this and they're saying this must mean Tesla's doomed. This is a huge layoff. This comes all while there's a very strange situation going on with Tesla stock. The stock is trading at a higher forward PE right now than a trailing 12-month PE. People are looking at this and saying, what in the world's going on, right? So I thought this is a perfect day. I want to go in depth on Tesla stock. I'm feeling really passionate about this here today. I want to talk about the good, the bad, the ugly, where this company is going in the future. I posted something on X here today, and I said down another $8,900 on Tesla stock here today. It's a fun roller coaster ride. The next up cycle is much closer than many think, and so we're going to discuss that tweet, if they still call it tweeting or now they just call it posting on X, and we're going to discuss that. And why do I believe this stock is, let's call it sooner rather than later in regards to recovery for this stock, okay? So, I hope you guys enjoy this one here today. I appreciate y'all joining me. All I ask in return is hit that thumbs up button and make sure you're subscribed here to the channel. That's all I ask in return. I've spent the last many hours preparing this video for you guys, so it's the least you can do. Smash a like for me, okay? Alrighty, so where I wanted to start out today's video is the layoffs, okay? Now, the reason I want to start here is because I would say most people are not educated on Tesla's history, what has happened and transpired in the past. And so they see certain things going on and they think it's something that just happened out of nowhere and it's like never happened before, okay? I saw this from Sawyer put out on his X today. I thought this was great. It says 2017, 2% of headcount got laid off. 2018, 9% of the headcount. 2019, 7%. 2022, 10% of the salaried workers got cut. And then 2024, 10% of headcount got cut here, right? Now, here's Tesla's revenue throughout that time period, right? This was the first layoff in 2017. Their revenue was $11 billion. In 2018, they did their second layoff, which was actually much, much bigger than the first layoff, 9% headcount there, right? And $21 billion went up to 24, right? Nowadays, we're at about $100 billion roughly run rate, somewhere in there, that ballpark, right? The third layoff, 2019, when the company was doing $24 billion. The fourth layoff in 2022, when the company was doing $81 billion and coming off of a year when they did $53 billion, right? And now we got a fifth layoff in 2024. So if you look at something like this, right, it's very important to understand these layoffs have happened before, and yet the company grew revenue substantially and double, triple, quadrupled up revenue in very short amounts of time, even though there was layoffs going on, right? This is also Tesla's annual employee count. This shows you how many employees Tesla has, right? And look at when they did their first layoff in 2017, the company had 37,000 employees. Well, today they have 140,000 employees, right? And even after you factor in this 15,000 roughly count of employees laid off, it's still going to be a gargantuan number compared to where the company was doing their first layoffs and second layoffs and third layoffs over time, right? That's pretty incredible. Now, you also look at Tesla's net income over that time period, right? When the first layoffs came, Tesla was hemorrhaging money. They were in a horrible position. There was a lot of people that thought Tesla was going to go bankrupt and they weren't going to make it out to the other side, right? And the company lost nearly $2 billion on the bottom line in 2017, right? And they brought that down in 2018 to under $1 billion of losses, right? And then in 2019, when they had that third layoff, they lost about $862 million. In 2020, they flipped it to profits, and then obviously the profits have grown immensely over the past few years, right? And so the moral of the story is, in regards to this, right? Layoffs do not mean Tesla's doomed. If you don't understand Tesla's history, and you don't understand that this is the fifth layoff in the company's history, right? Or at least in the recent years, Tesla's been able to grow massively over time and still add to employees. And don't be surprised if 3 years from now, 2 years from now, 5 years from now, Tesla has way more employees than what it has after this cut, which this cut might take them down to 120-something thousand employees. Don't be surprised if in a few years from now, you see Tesla's employee count at 150,000 or 250,000, okay? Do not be surprised at all. It is actually more likely that Tesla is about to go through its next big growth cycle. Because if you look at the past, when they did these big employee cuts, right, these layoffs, very shortly after, there was actually a big growth coming for the company, right? 2017 into 18, right? And then obviously 2019 into 2020. And there was still substantial growth even when they did that 2022 cut, right? Coming off of that year to kind of where the company's going now. So the moral of the story is this does not mean Tesla's doomed. And I thought we needed to get that out of the way first and foremost in regards to this situation. Next up here, Cybertruck, right? Once again, this is the most talked about, debated vehicle in the history of the internet. It's ridiculous. Every day you can't go anywhere on the internet without hearing or seeing something in regards to Cybertruck. It's incredible, right? So, Cybertruck. Now people are worried that Cybertruck, there's delays because there's some sort of issue with the accelerator, right? Now, this is the 5th vehicle that Tesla's really ramped into any sort of pretty decent production, right? The first one was the Model S. The next one was the Model X. From there was the Model 3. And from there was the Model Y. Now let me ask you a question, okay? How many of these vehicles did they have production problems when they were in their first year? I'll show you. 3. 3 of the 4, they had major production issues in the first year of that vehicle, right? The Model S, the Model 3, and the Model X all had a multitude of issues, especially in that first year that they had to sort out and fix and problems. And guess what we're seeing with the Cybertruck? The same exact thing. The only vehicle Tesla's ever ramped that was, I would say, pretty smooth was Model Y. But why was that? The reason that is Model Y was basically a Model 3, just a bigger version. It was extremely similar to a Model 3. And so that was very different than anything Tesla had done before because the Model X was very, very different than the Model S. The Model 3 and the Model Y were like babies, okay? So in regards to this situation, it should not come as a surprise or freak people out that Cybertruck has this issue and that issue and they got to work out all these kinks in the first year. That's also why I never buy a Tesla new model in the first year. Do you see me running out there to get a Cybertruck? I could even get a Cybertruck right now if I wanted to because I've been a Tesla shareholder for so long and they'll move you to the front of the pack if you're a Tesla shareholder. I don't want a Cybertruck right now. Let me get a Cybertruck next year. That sounds good to me. 2025 at some point in time because I already know they got a bunch of issues. They got to work out all those issues. I'm fine. Like give me one next year once you got all these kinks and problems worked out, and that's cool with me, right? Now also, this should not come as a surprise that this is difficult when ramping a new vehicle. Tesla's gone through this before, right? Remember production hell? This is way back from 2017, 2018. Elon Musk would talk about production hell and what was going on for the company and how much struggles they were having and how difficult it was to ramp the Model 3 up to big volume. It was an extremely stressful time in the company's history. Obviously, they were losing a fortune during that particular time frame. And there was a lot going on, right? And there was a lot of people that thought kind of in that 2017, 2018 time that Tesla was going bankrupt, right? It was a very difficult time. So for them to be going through some sort of production hell now, let's say in Cybertruck, doesn't come as a surprise. And I'll say this because I've been such a follower of Tesla for so many years. I'll say Cybertruck's been much smoother than production hell from Model 3, in my personal opinion, from kind of what I've seen out there, okay? Now, next thing we got to talk about is a little bit on the stock price, right? Because you got to understand what's going on with the stock price and the different dynamics at play. I pulled you up a 3-year chart of Tesla here, okay? Now, there's an epic amount of bag holders in regards to Tesla stock. Bag holders is basically a derogatory term to describe people that have been holding the stock for a long time and have done nothing but lose money on that stock, and they're down, right? And basically, outside of this little time period right here, which I actually picked up some Tesla shares here, outside of this little time period right here in very late 2022 and the very beginning of 2023, which was like a month or 2 month span, outside of that little teeny time period, if you have bought Tesla at any point in the past 3 years, you're down on your shares. Down on your shares. You're what the shorts and the bears would call bag holders. Now, the reason I tell you that. And the reason it's important that everybody understands this is we are going through a very important phase in Tesla's stock price history right now. We're going through a phase of what I call make or break. Make or break investors. And this is a time period when certain people that have been bullish on the company are throwing in the towel. They've just done with it. The stock has gone just pretty much down for 3 years, and they're finished. They're like, they're sick of seeing all these other stocks make money, and they're like, why do I want to keep trying to be in this Tesla stock? Bad news after bad news after bad news after bad news. I'm moving on, right? And that's how you get selling pressure on a stock. Even if you're in a bullish market, a stock can keep going down if you just continue to get people putting more and more selling pressure, more and more selling pressure on it, right? But you also have a very other side of this story that happens and emerges when something like this transpires. And those folks are what I call diehard longs. You can't break these folks. This is a group of individuals that emerges, and you cannot, they are the diamond hands. You cannot break their spirit. You can't break their soul. They're on the mission for the next 5, 10, 15, 20 years. They're thinking about where revenue is in 2030. They're thinking about where net income is in 2032. These folks are thinking way out to the future, and whatever goes on here in the short term is just little money anyways. It's just breadcrumbs. They're going after the loaf of bread, okay? So you have these two things happening at the same exact time, right? And one group of these folks, they look at Tesla stock going down, and they say, thank you. I want to pick up more and more shares. You got a group of folks that are saying, this is a waste of money, capital. I could be making money in savings accounts. I could be making money in treasuries. I could be making money in Nvidia and all these other tech stocks. And I'm in the stock that is the bum stock of the whole group, right? And so this is important to understand. This is going on literally right now. Like this is what's happening right now, okay? So you got to understand that weighs on a stock price, at least a little bit in the short term. But what has a much more negative effect is this. Tesla execs, 2 of them, right? These folks own a lot of shares. You add on another 15,000 employees that got laid off. It puts so much selling pressure on a stock in the short term. It's a very short-term phenomenon. We're talking it really matters for like anywhere from a few weeks to maybe 2 months, okay? In terms of the big kind of downward negative effect from this. But when you talk about major executives that own a lot of shares, there's a decent probability those executives will cash some shares, right? When you talk about some maybe middle managers that were let go and some other folks, it's just a lot of people that own a lot of Tesla stock because a lot of compensation comes in that. And so it's very negative for the stock price of this company in the short term, okay? Now, one other thing, side note, that I think is very important I mention here in regards to these executives leaving the company, very important I mention this. These individuals left on great terms. If you look at the commentary from Musk and these guys on X, it was nothing but like love and respect. These guys left on very good terms. It was not some sort of, let's call it ended bad. And no one wants to talk to anybody. And, if they have nothing nice to say about each other, okay? It's complete opposite of that situation. And so I look at that as a very much a positive thing because it can go either way when you're talking about executives departing a company. It goes really just one of two ways. Either there's a lot of love and respect and admiration there, or the two sides hate each other and they can't wait to get out of there. And it definitely wasn't that situation, right? Now, next up here, this has to do with more Tesla's competition, right? Which these are all Tesla's short-term competitors. Are these companies still around 10, 15, 20 years from now? And are these companies competitors to Tesla, in 2035? I'm not so sure about that. I'll just be honest with you guys. But for right now, they're Tesla's competition. Now, for these guys, inventory is starting to pile up. If you look at days of supply of these vehicles, and I bet you these numbers are going to get worse over this next few months. I mean, inventory is piling up. Alfa Romeo's 228 days of supply. Audi's at 108 days of supply. Chrysler's at 184 days of supply. Dodge is at 255 days of supply for Dodge. Oh my gosh, go get a Hellcat. Holy smokers, that's no jokers. Ford is at 108 days of supply. Genesis is at 156 days of supply. Infiniti is at 138 days of supply. Jag's at 176 days of supply. In Jeep, man, I did see so many Jeeps at this one dealership I went by this past weekend. It was ridiculous. I'm like, holy smokes, I got a Jeep for every person in Arizona, I think, at this place. 183 days of supply for Jeep out there, right? And these were numbers as of several weeks ago. Once again, I would expect these numbers are going to get worse over the next several days. So inventory starting, keyword is starting to pile up for these guys, and start going by dealerships now, and you're going to start to witness, oh wow, what you saw 2 years ago is not what you see today. Now, there's two companies that are holding up well, I would say, in this situation. Those companies are Toyota and Honda. And that's really about it. Now, the reason those two companies are holding up so well is why? Well, they produce cheap vehicles, right? Camry, Corolla, Honda Civic, Honda Accord. These are very, relatively cheap vehicles, and they're great on gas mileage, right? Which is gas prices are very elevated. We all know that. And so people are looking out there and they say, wow, Toyota Camry sounds good at Toyota Corolla. If they're not sold on EVs yet, right? Because there's a lot of people that aren't sold on EVs. They got all these questions. They're like, heard negative things. Like, I don't know where to charge and I can't charge, all that crap. Okay. And so the bottom line is these two companies are doing well. Basically, everybody else is doing bad. So the moral of the story that I see playing out here is I think the margin pain that Tesla has felt over the past 1 to 2 years, big traditional auto is going to feel that over the next 1 to 2 years. Traditional auto had a lot of inventory to fill over this past year or two. Because if you went by dealerships a couple of years ago, even 18 months ago, those babies were empty. And so there's kind of been a lot of catch up here, getting days of supply back more balanced. But I think this is end up going to lead to big traditional auto is going to feel margin pressure over this next 1 to 2 years. You may say, how does that happen? Well, automakers typically place incentives on older models and slower sellers. Included on the list are cashback offers, special interest rates, discounts. All these sorts of things hurt margins. They all hurt margins of the automakers, right? And these are all things that get much more probable when your days of supply start getting higher and higher and higher. Because next thing you know, if your dealerships are loaded with inventory, right? Because everybody sells in the dealership model except for Tesla. If dealerships are loaded up with inventory and you got your new models coming out, what do? You have to start saying, okay, we'll give you cash back here, we'll give you special finance, and all these things that end up hurting your margins because you're like, we gotta move this, guys. We gotta get this inventory because we've got the new models we need to get in. And so this sticks you in a real bad situation. And this is why in recessions, automakers can many times go bankrupt or just face an incredibly hard time. And the reason being is all of a sudden imagine, you don't have nearly as many people buying autos and your dealerships are loaded. And all of a sudden you're stuck with a situation like, wait, we're producing all these vehicles. We can't sell into them. You got to start discounting. You got to start shutting down production lines. That creates a whole mess. Next thing you know, your margins are going boop, 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 bad. And next thing you know, you could go from making huge profits to taking huge losses. And that can all happen within 12, 24 months. It can happen quick, really, really quick, okay? And so this is all something that's playing out simultaneously. Now, in regards to Tesla, it's a very different situation than I think what these traditional automakers are about to go into. Tesla actually is raising price. Yes, raising price. Now, this is something I called out months ago, and I said, I think Tesla's going to start raising price as the year goes on, okay? Now, this came out of Reuters last month that Model Y was going to raise to $43,900 and $48,900 for their rear-wheel drive and their long range. Now, I just checked Tesla's website. They're $44,900 and $49,900. So I don't know if Reuters was inaccurate or maybe Tesla went up $2,000, but that is something that's going on. Tesla's, if anything, is raising price now at this point in time, okay? Now let's talk about why I think the stock might be much closer to a very nice recovery than a lot of people expect, okay? So let's discuss this. Now, so this is 1000xstocks.com. This is my personal, very expensive tool I built over the past long bit of time here. Only I have access to this. But in regards to this tool, I have a bunch of cool stuff you can do with it. And one of those is you can compare stocks side by side and kind of where those stocks are trading at on a massive amount of different metrics. And I just kind of screenshotted some of them here, right? Now, people like to put Tesla into the category of Ford and GM, right? And they say, Tesla's massively overvalued. Look at where Ford and GM are at. And look where Tesla. Well, a few things, right? Tesla's got completely different gross margins than those automakers. Tesla's also got completely different net margins than all those companies, right? So that's something very important I think you should factor in. That's very important, right? Tesla's margins are way different. Even in bad times, their margins are way different than those companies. Never mind in good times. We know Tesla can have margins 20+% and just blow these guys out of the water. Now, the next thing to think about, right, is Ford and GM, like, once again, the EV transition is going on. If you're not sold on that, in that transition over this next decade, I mean, I don't know what I can do to sell you on that. Like, it's just impossible. Like, you're either on the bandwagon of EVs are going to get way more popular over this next decade and they're going to take over more and more market share year after year after year, or you just, think we're going to all drive internal combustion engines forever, which is not going to happen, okay? So the bottom line is Ford and GM are not set up the best for the EV revolution. We do know that, right? That's why these companies are having to partner with Tesla for the supercharger network. So I think Ford and GM should trade at massive discounts because I think there should be real question marks about how those companies do, being that we're changing to self-driving vehicles, we're changing to EVs as a society, we're changing to charging networks, and we're changing from the dealership model to direct to consumer more, right? And so when you're having to go through all these different transitions, I don't even know if Ford and GM can be around 10, 15, 20 years from now. I think it's maybe they are, but I just think it's a big question mark. So the companies you have to kind of compare more to Tesla would be companies like Rivian and Lucid, right? But the problem with comparing Tesla to these companies is Tesla just is night and day better than these companies across the board. If you look at the forward P of Rivian and Lucid, they're negative because they're going to lose money over the next year, and a lot of money. Trailing 12-month P, there is no trailing 12-month P on these stocks because they lose a fortune, right? If we look at the gross margins of these companies, they're negative 46% and negative 160%, respectively, for Rivian and Lucid. If you look at net margins of Rivian and Lucid, we're talking negative 115% and negative 416%. Those numbers are so mind-blowing, it's hard to even fathom. So, and if you look at where Lucid's trading at, Lucid stock is now in the gulag. Rivian stock is getting closer to the gulag. I think Rivian stock recently is $8 a share. So now it's looking more and more like a potential that maybe Lucid or Rivian go bankrupt in the next few years, right? I wouldn't bank on that, but it's definitely a realistic potential. So even if you look at Lucid and Rivian, I don't think they're the best comps. Their businesses are a disaster, their margins are a disaster, and there's real serious question marks about if those companies will even exist a couple of years from now, right? So I don't think this is good comps for Tesla, and I don't think you can comp Tesla against anybody that's in the automotive sector, whether they're EV or not. Because you're either having to comp them against old school dinosaurs, that there's question marks if those businesses will even exist 10, 15, 20 years from now, or you have to comp them against the new age, which is just a complete dumpster fire, just to be quite frank, okay? So there's two companies you got to actually comp Tesla against, in my personal opinion. Those two companies are Amazon and Nvidia, okay? I think those are fair comps for Tesla. Obviously, totally different sectors and where those companies compete. But if I think about the employee forces, if I think about all the game-changing technology, if I think about those companies kind of looking to the future, always focused on growth, right? Market share, I think about game-changing companies, I think about Amazon and Nvidia, right? To go along with Tesla. And if you look at this, Nvidia, it looks like the best deal by far of those three stocks, right? If you look at the gross margins, the net margins, you look at the trailing 12-month PE technically as Tesla is the best there. So that might not be the one Nvidia wins, but everything else, PEG ratio, forward PE, Nvidia wins it all, right? And also revenue growth for this year, Nvidia is going to win that. But the important thing to factor in there is not as simple as just looking at all that and saying Nvidia is for sure the better deal. Also keep in mind, Nvidia has been going through an ultra great time for their business model. Tesla has been going through an ultra bad time for their business model. So I would not expect forever and ever to be as great for Nvidia as it's right now, okay? And I also think it's a big mistake to assume that for Tesla, everything's going to be as bad as it is right now, it will be into the future. That's not realistic at all, right? Amazon's kind of in the middle between those two. It's kind of like, it's an okay time for Amazon, certainly not the most bullish time, certainly not the most bearish time in regards to that, right? And so when I think about Tesla, I think about what are these numbers going to be when Tesla's back into a great time again, right? So that's something to factor in there. Now, what happens here? What happens during this time period, the back half of the year, right? Why are we much closer to, let's call it a nice recovery than I think a lot of people expect? Well, in the back half of the year, we have so much going on. One, I believe margins will improve in the back half of the year. The Cybertruck ramp will have happened. You're going to start having, obviously, the employee reduction start to help these numbers out pretty dramatically, right? And you're probably looking at prices higher for vehicles produced overall for Tesla, right? So I think the probabilities that margins start to improve in the back half of the year are pretty dramatic. I think it's pretty high probability that revenues will improve as well. And I think it's also very high probability that net income improves, especially when you factor in the layoffs and, obviously it's going to hurt this current quarter we're in. But if you think about the back half of the year, a lot of that should already be done at that point in time. So net income, revenue, and margins, that's a trifecta, should all start going up in the back half of the year. What happens when a company goes from the trifectas all getting worse to the trifectas all getting better? What happens? Usually the stock price explodes to the upside in that sort of situation, right? Now, on top of that, we have a complete wild card. On August 8th, Tesla's going to show off the Robotaxi. Huge day in the company's history. I mean, if I think about the three most important days in Tesla's history in terms of, products they've shown off, the Model 3, when they showed that off, the Cybertruck, when they showed that off, and the third is this day. This is absolutely going to be massive. Now, what does this do for the stock price? Well, here's the thing, okay? Retail is probably going to be able to get very excited, retail investors, right, about this day. Wall Street is going to be a mixed bag. Some Wall Street, they can't even really conceive of the possibility of robo-taxis anytime soon. So some of them are so far off the boat right now that, they can't even swim to this thing, even if they had a life raft, okay? So some of those are over there. You got other folks on Wall Street. I've heard a few analysts that are actually starting to model in robo-taxi numbers, right? Which I think matters. You will have some that will get very hyped about this. The Kathy Woods of the world, right? That have been talking about the robo-taxi opportunity for a long time. The next day or the next week, she'll be out there on CNBC interviews talking about it and how much it's going to produce and all those sorts of things. So how that affects the stock price, if I had to guess, it's going to be more positive than negative. There's no way I see coming out of that robo-taxi event and it affects the company negative. That just wouldn't make sense. Because the people that are already off the boat is not going to change their mind because they already don't believe in it anyways, right? And the other people that do believe in it are just going to get more sold. So if anything, that event's probably, I would say, a positive. I think it's just a big question of how positive. Is that like help the stock go up an extra 5 or 10% the next few weeks after that? Or is it more like a 15, 20, 25% move after that? But the net is definitely a positive for Tesla overall in regards to that, right? Now, the other thing the Robotaxi event is going to do is create massive publicity for Tesla. Everybody is going to be talking about that for at least the next few days after, if not the next week or two after. What did Tesla show off? Oh my gosh, the Robotaxi. It's going to be everywhere. It's going to be all over TikTok, Instagram. It's going to be all over X. It's going to be all over YouTube. It's going to be all over everything, okay? And so, it keeps Tesla's brand name out there. I can tell you that much. It keeps Tesla in the conversation, which Elon Musk is phenomenal. I think this is the best CEO in the world at keeping Tesla always in the conversation. I think it's absolutely magical kind of, what he does there. And so, once again, I think this is more of a positive, certainly, than a negative in regards to the situation. So when I look at this whole Tesla situation, I think sunrise is coming. I think we're in we're kind of in that dark period. And as they say, it's always darkest before the dawn. And that's the situation in regards to Tesla. Sunrise is coming, brighter days are ahead. And I just think those brighter days are much sooner than a lot of people are realizing right now. And I think they'll find that out in the back half of this year. Time will tell in regards to the situation, okay? Guys, 1000X. I know I've gotten a sick amount of people reaching out to me. What's going on? You're going to release this to the public? What's going on? So I'll let people start joining a wait list for this, okay? So on the front page, you can apply for access. And it's a tool I really built for myself that's been pretty dang epic. So I'll probably make like a monthly plan or a yearly plan for people that are looking to join and get access to that tool. But I even created a feature on it where I can listen to any conference call. I could literally just type in a ticker symbol and listen to a conference call right away, which is sweet because I hate having to, go to a company's investor relations, go through all the crap to get to that conference call. And so I even put that feature in there, and I got so many other cool things. I'm just adding this tool. It's very expensive, and it's been put together for quite a while, but it's just a fun thing. So, anyways, if you want to join the wait list there, 1000xstocks.com. But in terms of that, my private group members, they'll get first access to becoming members in there. Then after that, it'll become Patreon. People that are in my Patreon will get access next. Then it'll be YouTube subscribers, and it'll kind of be everybody else after that. But, yeah, it's a pretty sick tool. I mainly built it for myself, though. It's freaking cool, man. So anyways, guys, appreciate you joining me. It's one of the advantages of having money is you can, just spend money and build projects and do stuff like that. I will say that's one of the cool things of money. And like, hey, what if we built a custom tool that's exactly what I need for all, like, man, that's the cool thing, okay? Anyways, guys, much love as always. Appreciate you joining me, and have a great day.